OpenAI, the creator behind ChatGPT, is planning the biggest tech stock IPO ever, valuing its company at $1 trillion or more. Today, I'm going to be breaking down the real reasons why OpenAI plans to go public soon and what you should know as an investor before you buy. Let's get right into it. OpenAI recently filed its S-1 confidentially with the SEC, which indicates its desire to likely go public soon. But why go public now? Well, because they need the money. In 2025, they generated $20 billion in revenue, but they are projecting to have a $14 billion loss. Furthermore, these losses are expected to climb to $44 billion by 2028. So just think about that. If there's $20 billion in revenue and there's a $14 billion loss, that means that costs are $34 billion. That's a huge gap that they have to cover. Not only that, they've pledged capital of $1.5 trillion for cloud spending on data infrastructure for AI with other companies like Amazon, Google, Oracle, and Microsoft. This is staggering. Between the $10 billion plus loss each year, plus the $1.5 trillion capital requirement, they are simply not generating enough revenue to cover its expenses. This is not sustainable. While some private investors will help, at a loss at $10 billion per year, eventually their help is going to run out because these guys are in to make a return on investment. So where do you go next if private investors don't want to give? You go to the public market. And this is the real reason why the CEO has been so eager to do an IPO, while the company's CFO has actually been more ambivalent about doing this. In their recent private round funding, they were valued at $852 billion. So it makes sense to want to put the stock in an IPO because that valuation definitely has to exceed the $852 billion. So I'm guessing it would be $1 trillion or more, which would likely bring in over $100 billion in cash for OpenAI. And this will come primarily through them using their newly created shares and selling those to retail investors and institutional investors. The second reason they want to go public, and most people don't want to admit this, is that their big early investors want to cash out. I mean, these are people who invested back as early as 2019, 2020, and they have been holding on that stock for a long time, and they want to make a profit. And you can see this cap table. Companies like Microsoft, although they are a strategic partner, their stake is up 17x. I mean, they invested $13 billion and now that's worth over $200 billion. You have the foundation, you have employees, you also have venture capitalists like Thrive Capital who are due to make a big profit when this stock goes public if it does stay at that $1 trillion valuation or more. Now, as an investor who may invest once the stock goes public, there are multiple things you should look at when considering OpenAI, and that's the cost they charge businesses and consumers versus the value that they provide. And second is the competitive pricing pressures from other AI companies, which has been picking up since 2025. Uber has been one of the companies that have come out and talked about how AI is almost too expensive, paying the cost of token consumption to the cost of headcount. And when looking at this, they were not really able to see the benefit concerning productivity, and that with the cost, it was hard to justify AI spending. And these costs are enormous. Uber's chief technology officer recently commented that Uber had exhausted its entire annual Claude code budget in just the first 4 months in the year. For Uber, this brought the question of the actual sustainability of using AI. Microsoft also had a similar issue. I mean, they introduced Claude Code for their engineers in December 2025, and just 6 months later, they are winding down those Claude Code licenses. Why? Because the token-based billing also made it unsustainable from a deployment standpoint. And they now have pushed their engineers to use their own cheaper GitHub option. Now, this is what you have to understand when you're using AI like ChatGPT, Claude, or Gemini, is that if you're using them to answer a simple question such as how to fix something or go someplace, then the cost is pretty cheap, probably only hundreds of tokens. But if you are like these companies and you're using agentic workflows where you have the AI planning, executing, checking results, and correcting errors, a single task can cost tens and thousands of tokens. And while token costs will keep getting more efficient and keep coming down, it also depends on how much token consumption there are with the tasks and workflows. So AI in workflows for companies can still be very useful, but companies are going to have to do a cost-benefit analysis to find that proper balance. So when looking at the valuation of a company like OpenAI at $1 trillion, you definitely should recognize the limits that it actually can be used due to cost. I think even what's more important is its ability to compete globally. And one of those companies that seems to have a structural benefit over OpenAI is DeepSeek. And you can see just from a cost standpoint, the top model is the GPT 5.5. And you can see the input and output costs dollars per million tokens. If you go down to DeepSeek, the V4 Pro version, you can see that ChatGPT's input cost is 10 times that of DeepSeek, and its output cost is 34 times, 87 cents versus $30. I mean, that is huge. And this DeepSeek V4 Pro version is actually made to compete with ChatGPT's 5.5. Let's look a little bit deeper of why DeepSeek is so much cheaper. For its architecture, it uses subnetworks. So it has something in its algorithm for a mixture of experts, and you send in a query and it sends it off then to a specific subnetwork. This is different from OpenAI, which sends out everything to its whole neural network. DeepSeek's method drastically reduces the computing cost per query. Also, DeepSeek's training costs are much cheaper. They claim that they were able to train their model for $5 to $6 million. This is much less than $100 million to $500 million is estimated for OpenAI to train this model. And they did this through just optimizing code, using efficient hardware, and some algo innovations. They also are cheaper just due to less regulatory overhead. Since OpenAI is based in the US, they have more stringent regulatory requirements versus DeepSeek, which is not. And the biggest thing that you see down here, before I get to the open source, is that look at the benchmark performance. 83 out of 100 for DeepSeek to 93 out of 100 for OpenAI. So you're getting similar performance for something that's over 90% cheaper. I mean, how can you beat that? Especially for cost-conscious consumers or businesses outside the US, it's going to be pretty hard for them to go with a product that's 34 times more expensive when the performances are basically similar. Now, the biggest structural disadvantage that I see is that the fact that DeepSeek is open source. And this means that anybody can download, modify, and self-host DeepSeek's AI models. Now, you still can pay a little bit to do the API calls, but if you have your own infrastructure, you don't have to pay anything and you can just run DeepSeek on your own infrastructure. This is very different from OpenAI, which has a closed proprietary system that everybody has to pay each time for each API call. Now, DeepSeek is not doing this for charity. It's actually a smart strategy. They are open sourcing their technology to build a global developer base, to create network effects, and to boost adoption. And then once the whole world is using it, then they can come in and charge. And this has been done before. You want to guess who? Microsoft. In the 1990s, Microsoft went to major computer manufacturers like IBM and Dell and basically offered them big discounts to put the operating system on their computers and to put some of their office products like Microsoft Excel and Microsoft Word. These products shipped to millions of people, and when people got the computers, they already had Microsoft OS and they already had Word and Excel. Immediate, fast adoption. And this worked. By the end of the 1990s, Microsoft had over a 90% market share of all computers operating systems worldwide. Also, some of its Office products like Microsoft Word and Excel were on 90% of computers as well. This created huge network effects. As other people saw businesses and their friends having Microsoft products, they also got it as well. And this effect compounded and compounded. Even today, although Microsoft has lost some market share, they still dominate when it comes to desktop computers, and their Office products are still used by over 80% of businesses. DeepSeek is copying the same strategy as Microsoft right now with its AI product by open sourcing its technology and making it very cheap. This worked for Microsoft. They literally wiped out competitors. I believe this is one of the biggest structural disadvantages that OpenAI has compared to competitors like DeepSeek globally. So what do you ask yourself as an investor? Will DeepSeek's open source, price efficient model pose a long-term threat to OpenAI? Or can OpenAI, who's already experiencing $10 billion plus losses each year, survive against a competitor who offers a product that is similar in performance but over 90% cheaper? Even from a domestic standpoint, you have Google's Gemini and Anthropic's Claude catching up to OpenAI, especially in these last years. I remember in 2023 and 2024, there was literally no real competitor to OpenAI. Today, a lot of businesses are choosing Claude Code. A lot of people wanting to do chatbots are now switching to Google Gemini. OpenAI still hasn't reached its goal of having 1 billion weekly active users, while it's also some data that shows people are unsubscribing from them and moving to Claude or Gemini or other ones. So what's the angle? Remember, focus on the fundamentals. Number one, OpenAI is unprofitable. Unsustainable losses at $10 billion plus per year. And I'm not sure how going public fixes that. Number two, looking at its own internal key performance indicators or KPIs, they are also not doing well. They still haven't reached 1 billion weekly active users. And they face intense competition from other AI companies, whether it's Gemini, whether it's Claude, or whether it's DeepSeek. Number three, on a global basis, they face pricing pressure and some structural disadvantages from competitors like DeepSeek, which is actually a lot more cheaper for people to use and still get that similar output. And number four, do not be somebody's exit liquidity. There are a lot of big investors who will be looking to cash out when OpenAI does go public. Now, OpenAI still could do well. You just have to understand the valuation. I mean, at 1 trillion to 1.5 trillion, that means it's going to be trading at 50x times its sales. Compared it to Google, which has YouTube, which has search, which has cloud, which has AI Gemini, it only trades at 11 times sales. So how can OpenAI with a smaller business footprint trade at 50 times sales? Does it make sense to you? But what do you think? Is OpenAI fool's gold or is it the next stock of the decade? If you enjoyed this video, believe it has some valuable insights, hit the subscribe button, turn on those notifications, and I'll see you next time.